Welcome back to Everything Money. In this video, we will discuss Mohnish Pabrai and his liquidation of his Alibaba shares. He went on a rampage talking about how much he's in love with Tencent. We'll talk about Alibaba. We'll mention why Tencent, in his mind, is a good company to invest in the future. I'll bring in Paul. I'll bring in Mo. He will show you the charts on both, and we will use our software to show you the financials on both. Just a glimpse of what we do here at this channel. But first, why should you watch this video? Well, number one, we get to ask Mohnish Pabrai next month personally why he made this decision. But in general, I bring your questions about Alibaba and Tencent to a couple guys that manage and maintain about over $100 million in real estate, multiple businesses, and stocks. And they will teach you the mindset you should have in investing with Alibaba and Tencent and Mohnish Pabrai's mindset as a value investor. So I'll bring them in, folks. I give you Paul and Mo. Welcome, boys, into the show. I guess I'm kind of claiming ownership to the show when I start it like that, Paul. But welcome to your own show. Welcome you in.
Hola. So with Mohnish, I'm hearing a lot of different. Now, keep in mind, everybody, I'm not really big in the news and the reason about investing, because at the end of the day, I truly believe in making independent decisions. And I believe that paying attention to what's going on in CNBC and the news is just going to cause a bias in my mind when I keep hearing the same thing over and over. So I've heard Mohnish decrease his ownership by 78%, but a few people in our chat, who subscribe to our software, said to me that they don't know if he's being fully forthcoming about it. Like, they don't really believe he maybe got rid of all of his ownership because he was kind of evasive about that specific point. Did anybody else hear that, Mo? Seth, do you guys hear that?
Yeah, I saw a question that I saw an interview that he did at, I believe it was William and Mary College, and somebody directly asked him about his Alibaba holding, and he said, I am going to dodge your question. I will not answer questions on individual holdings.
So this got around, Paul, on Reddit. It shows, again, this is Pabrai's investments. Now, this looks like a nice graph. Is it fabricated? I don't know. And this is what got around on the Reddit thread. So this is all the hubbub. I think along similar lines, Paul's other people saying, other YouTubers are titling the video, he sold it all to get into Tencent, which I don't think he specifically said as well on the video. He just then started saying, let me tell you about a company like Tencent. So we'll certainly talk about both. But Paul, go ahead, Mo.
There's been no confirmation that he's bought Tencent. He's spoken highly of it in multiple videos. People have done videos about him speaking highly of it, but there's zero confirmation that he's bought any Tencent.
Really? Zero confirmation?
Yeah. The only person that I'm taking confirmation from is any of his filings or his mouth, and he has not confirmed it.
So, guys, the other thing this goes back to is, do we care? It's not to disrespect Mohnish. It's just what we're trying to teach here is a process of independent thinking. With that said, somebody I'm sure will mention, well, Paul, you bought Alibaba because of Charlie Munger. Not true. I bought Alibaba because I like the numbers, and Charlie Munger's belief in the numbers being accurate by having ownership made me feel comfortable buying Alibaba, but I did not know it all. I still don't know what Charlie Munger values Alibaba at. Zero idea what they value it at. The biggest issue I've ever had with Alibaba and any company in China is the reliability of the numbers coming out of China. I don't know if I don't view this. I don't view it as the same thing as to me say, oh, I'm going to own Alibaba because somebody else does. I look at it as I've done my own evaluation, and I sat there and say, I like Alibaba's numbers, but I don't know if I understand I believe the numbers. So when a guy like Charlie Munger owns Alibaba, to me, that's him telling me, I believe these numbers. I'm okay with that. I think it's a big chunk of his didn't Munger, isn't like 20% of one of his funds in Alibaba or something like that? So he must really believe the numbers.
Yeah, it's a huge number. And with that being said, people are saying, like, Pabrai exited. He exited. He took $36 million out. He still has $8.5 million in Alibaba. It's not like he just completely left the stock. So that's nothing to look away from either. Now, if he went to zero, maybe we would raise questions. But to me, I don't care. Like Paul said.
To me, that's a big drop. I don't care in the sense of, like, first off, Mohnish admits he's a cloner. So yes. Is he cloning anything here? When I say cloner, everybody, this means that he believes in copying Munger, Buffett, and all these great investors and saying, I have no problem with that. I'm going to clone everybody. He has no shame about it whatsoever. And I agree with that to a certain level, but at the same point, I still like the independent thought process of, and I'm sure Mohnish does the same thing. And we'll get more in our interview with him about how he clones and what he independent thinking he does do, because I'm sure he does. There's no way he doesn't.
Right.
But I look at it going, hey, I'm still a believer in Alibaba. It's my largest holding, but it's all relative. It's only 2% of my holdings versus, 8.5% of Manesh's in his fund. So even after decreasing by 78%. So I don't know what to say besides that.
And the last point that I'll make is we bought the stock based on Charlie Munger believing the numbers. Charlie Munger increased his position on Alibaba. So if we're going to stay consistent, then the consistency is there.
Paul, let's pull up our software and show people why we were in love with Alibaba, just in general, using the 8 pillars.
Okay. So, Seth, you showing my screen?
Go ahead.
So this is our Everything Money software. Here's the 8-pillar tool. We type in Baba. I'm going to go to Alibaba Holdings. So our 8-pillar analysis here, even though these are usually, when we see X's on these two, I don't know what happened there. X's on these two, it tells me that they're overvalued. The company's overvalued. However, as we'll always say is, you have to look at the growth of a company to determine if it's overvalued or not. Look at this growth in revenue. 1.7, 9, 12.6, 17.7, 27.5, 44 billion, 64 billion, 85 billion. 100. This thing is growing like crazy. So to assign the same multiple to a fast-growing company as you would for like an AT&T, it's completely unreasonable and unfair. So we look at this 8 pillars, and then we go to our stock analyzer tool. And this is the big crux of it. The stock analyzer tool allows us to input our numbers here and assumptions on revenue growth and profit margin, everything like that, to determine what the company be worth. So I do a 10-year of analysis. Now I'm different than Mo and Seth. I had to go ultra conservative to say, okay, let's say that growth just really plummets, just absolutely plummets. From 45% a year over the last 5 years, 15, 20, 25. Profit margin, 18, 20, 22. Free cash flow margin, I'm going to do the exact same thing. PE, 13, 15, 17, 13, 15, 17 on the free cash flow. And then my return I want is 12.5%. The reason being is I can invest in an ETF and get 9 to 10%. So for me to buy an individual company with a margin of safety, on top of the margin of safety I've already done up here by decreasing my growth rates, I hit the analyze button. Guys, no brainer. Absolute no brainer.
And these are very conservative assumptions.
Very. Now, somebody did bring up to me recently, like, Paul, why didn't you like Alibaba at 320? I never said I didn't like Alibaba at 320. What I said was I didn't believe the numbers coming out of China. Now, maybe I'm wrong on that one, but I look at it going, I remember looking at the numbers going, I kept saying, if you believe the numbers, and I don't remember what we said at 320, to be honest. I know Seth said recently we thought it was overpriced, and I was going to correct you, Seth. I don't know if we actually said that. It was always the concern about the numbers out of China. Mm-hmm. But once we saw that Munger was okay with the numbers, I mean, look at this thing. This thing could be a $1,500 stock in 10 years. I look at it going, even if it's a $650 stock in 10 years, which we're saying on the high side, it's $650 today, assuming these numbers. I think this company is a no-brainer, and I'm going to buy them. And I'm going to hope that even if this pans out, the low level of my estimates, I'm still buying a stock for 20 or 30% below where I can buy it for today, assuming a 12.5% return for the next 10 years. And I'm happy with that.
Mm-hmm. Yeah, Paul, we did a video just a few days ago on Tencent. We thought it was currently overvalued, but I don't know. There's this interesting YouTube channel of Finding Alpha. They did a breakdown of the Pabrai interview, and I saw this graph, Paul, which I certainly wasn't aware of, and you have a viewer, you might not be either. This is what Tencent is. And if you look, Paul, the online gaming, number one globally in revenue. Look at the right side, long form video, news. We know of the Tencent music provider, number one. Some of these channels have hundreds of millions of users, public cloud services. Mohnish Pabrai said that he thinks Tencent will be bigger than Amazon in the next 10 years. It's pretty shocking facts. And in the end, there's this weird transition where I guess the founder of this company, Naspers in South Africa, in 2001, he bought about $30 million into Tencent. It has now ballooned to over $240 billion, Paul, and it's causing havoc in the South African just in general, it's causing havoc in their stock exchange because it's just worth so much. It's completely absurd. And Pabrai thinks there's a lot of room for that to grow. But you're not so much in love with Tencent. I mean, I'm certain we're going to ask him about this. But, I guess my question is, why is that, Paul? Why have we not fallen in love with other companies like Baidu, Tencent? Why have we flocked to Alibaba so much?
I think with Baidu, I'm okay with the value. I don't remember exactly what the value was, but I think I'm okay with Baidu. It's just, again, a question about the numbers. Tencent, what was the ticker for Tencent that you have, Seth?
So this is a foreign ticker, but it wasn't in our soft. Oh, you got it. It's TCEHY. Yeah, that's it.
So I want to run it through our stock analyzer tool, but I can't when we don't have it on like Y charts here. I mean, there's massive growth in this company. Massive growth.
It is massive, and that was big. That was Pabrai's biggest thing. What he actually said about Tencent versus Amazon. He said Tencent will run circles around Amazon.
I don't see. To me, Alibaba. I don't know.
Paul, going back to this, it's like so we know they own WeChat, but if they're already number one and growing in a lot of these, this seems like they've already outreached Mo. It seems like there's a lot more avenues of growth over something like Amazon. I mean, we all know, does Amazon offer music? Does Amazon offer a chat? I mean, yeah, maybe he's just talking about not in comparison, just talking about the growth of both companies. This will just be bigger, but it just seems like they got their hands in so many different things. It's astonishing, really.
So I think that's why Pabrai likes it so much, is they have their hands in so much, and he basically said they have three bazookas. One is that they have a team of developers that are basically just tons and tons and tons of developers that they can, any new business or venture that they want to start, they just assign people right to it. Plus from my understanding, they don't hold a lot of cash. They deploy a lot of cash into their growth. So that's two big things that they have going on their side. But I think that's why Pabrai liked it so much, because the team of developers that they can go to, that if they see slowing growth in one area, they can just go and start a whole new avenue and assign developers to that and just continue growing.
Paul, does this tickle your fancy about Tencent anymore?
Yeah, I mean, it looks. Listen, the hard part for me is that's why we created the stock analyzer tool, because I started to realize I was ignoring good opportunities by using metrics that didn't factor in growth as much as I wanted them to. Right, so it became. I wanted to be an exact science about, hey, if I assume these growth numbers, what's the stock worth to me today? Yeah, so that's the issue. I mean, we created all this software that we have here because we wanted to be more accurate. Our users wanted us to be more accurate. Our users wanted to be accurate on their own, and we created it because they want to do their own analysis along the way. This makes it so much easier. It gives all the data. You look up any company, it gives all the data here, 30 years of financial data, income statement, balance sheet, cash flow statement. It gives the 8 pillars right here without you having to do any math, any work. You get news in the company. You get the stock analyzer tool that'll tell you exactly what you need to pay for the company. We also have our chat where you have 6,000 people around the, one of the biggest things, Seth and Mo, that I'm hearing, and I think, Seth, you're the same way, is people just felt alone. They're just like, hey, I don't know who to talk to about this stuff because nobody around me believes in what I believe. But when we bring the YouTube community in and people from all over the world really believe in what we're doing and believe in our method, they can talk to 6,000 other people that are like-minded. We also provide daily exclusive content, 2 or 3 videos a day. They're only to our subscribers, 6,000 subscribers. So it really is a no-brainer. And the great thing is all this software plus all the extra things coming out soon are available 90 cents a day. It's an absolute no-brainer. 90 cents a day. You just go to everythingmoney.com or Patreon and sign up. And for 90 cents a day, if you're just able to increase your returns or decrease your losses by 1 or 2% a year, it'll lead to hundreds of thousands, if not millions of dollars in extra value, in extra net worth in your lifetime. So 90 cents a day, no brainer. Go to everythingmoney.com and sign up, and it's done deal for you.
Yeah, for our overseas folks, you can still go to Patreon and sign up at Patreon. They accept different forms of payment. So both will get you the software, Everything Money or Patreon. Mo, I think final take for me is this is enlightening me on Tencent. I'd love to look further. I'm glad that there are other channels doing the 20 hours of work to make one 8-minute video on how great Tencent is. So I'll let them do all the due diligence, and I'll just keep researching. But Paul, I think we should take a deeper look on Tencent. It sounds interesting. So
all right, sounds super.
That is our show. Fondle a thumbs up. Join Mo in the morning. He'll trade with you, and we will keep you posted on both companies. Thanks for watching. See you next video.